Rambus Stock. RMBS is the ticker symbol. Rambus Stock is selling off, and there's probably some more to go, maybe as much as about 20% more of a drop. It's down about 25% since its peak in February, but this is sort of mirroring a lot of what's going on with AI stocks. AI stocks, of course, lit up in November. They had been trending over the longer term for some time, but in November, NVIDIA, of course, announced their revenue gains and what AI was doing. So all AI related stocks are moving higher. But now we're starting to look at the reality of what's going on. Two things. First and foremost, the future revenue gains for Rambus is smaller than expected, and that's one of the reasons, big reasons, why RMBS stock has been selling off. Second big thing to consider, the stock market is likely peaking. We may move a bunch of ways sideways with what's going on with the presidential election and Federal Reserve not necessarily making a move. In the meantime, these stocks are likely to move lower overall because they're overpriced, and the stock market is not going to be chasing after yield. We may see a smaller slowdown in the economy, and overall the stock market will move lower. We're starting to see these hints of this happening. I still think that the Federal Reserve might have the ability to take a pass on raising interest rates simply because the economy might just sputter out a little bit. In the meantime, Rambus stock, overpriced. Let's take a look at RMBS stock and whether it is where you could actually buy into Rambus. Here's a look at Rambus stock. RMBS is the NASDAQ ticker symbol, down to 57.75 when I put this chart together. Don't know where it finished for the day. This is clearly down from the 76 earlier when it peaked. All right, so you can see towards the bottom there, Rambus did not hit they hit their revenue goals, but their future guidance is not what the market was looking for. Stock sold about 24%, which is huge. And that should be a wake-up call to individuals to be looking at their AI stocks. I'm looking at AI stocks and comparing them to alternative investments. There's a lot of risk in the pricing for AI stocks at these price levels. They're just a little too rich. Yes, there's going to be a lot of revenue increases over the course of the next 2 years. But when you factor that in, you start looking at it and you say, all right, yeah, sure, there's revenue increases, there's profit increases, but that's too much to pay for what you get as a potential investment. That's why we're starting to see these stocks get knocked around a little bit. The Federal Reserve, this is the biggest portion of what's going on. The Federal Reserve is likely to not lower interest rates this year. The market's been betting on that hard that they would. Now all of a sudden we're starting to see inflation numbers, 3 inflation numbers in a row, much hotter than expected. This is driving interest rates upward. When you take a look at those upward increasing interest rates, the yield you'd get for investing in, say, the 10-year Treasury, which is the benchmark investment grade, you get a much better investment opportunity out of the 10-year than you would Rambus. Plain and simple math. But what's the downside risk to owning the 10-year? First off, you're locking in at this point 4.6%. What's your downside risk to Rambus? You're probably looking at another 20% haircut. So there isn't much downside with the 10-year. And if the Federal Reserve does flip in, say, 9 months' time and start lowering your interest rates, if you bought at a higher interest rate level, you're making money on that move. Given that, let's move forward and take a look at Rambus itself. This is SOXX, which is an semiconductor ETF. SOXX stock, I like this one. There's other ETFs out there for semiconductors, but I like SOXX simply because it doesn't weight NVIDIA as much as the others. When I break these down, I look at every single stock, but only one share, asking the question, what's each share worth? There are weightings involved, and NVIDIA is overweighted when you look at some of these. And I get that process, but I want to know basically how each stock is going to do. Because if you buy one stock and you get a 5% movement, it doesn't matter what the other stocks did. If you got a 5% movement, that's 5%. That's why I look at things a little differently than I know the rest of the market does. I don't weight things when I look. Given that Rambus it's up at what, about 115%, 110% more so from last spring, versus SOX, which is interesting. But we're probably going to see Rambus coming down and meeting on a percentage basis where SOXX performance is. You could theoretically buy SOXX and sell Rambus, and when those two on a percentage basis met, you'd make some profits. Moving forward a little bit, this is from February. Rambus Stock shares down with weak Q1 revenue outlook. We're going to get this here pretty soon. I wanted to take a look at all the AI stocks, and so I'm since I've just launched my new Substack, I've actually had it for years, but I've just never done anything with it. I wanted to take a look at all these AI stocks. We're starting to get more and more information. We're going to be getting some, we're just entering into earnings seasons, and we're going to start getting some news on these. So I'm getting some information out there. Rambus, I believe, is probably going to get a bit of a haircut from there. Taking a look at projected revenue for Rambus. Now, here's the thing. Not much for 2024. But push out a little bit for 2025, and that becomes the saving grace. If it weren't for 2025, Rambus Stock, RMBS, could really get a haircut because there's no growth rate. And it's overpriced relative to what you can get out of the benchmark 10-year Treasury yield. So that 2025 is really kind of important. Now, another thing I wanted to point out, when you're looking at revenue, this is an important question to ask, what you can reasonably assume given future projections and what the company has done in the past, given an economic environment. Now, increasing revenue, generally speaking, over the past several years, 2024, not as much as what initially had been thought, but there's going to be an acceleration in 2025. You can reasonably assume that's going to continue, but we're looking at net margins right now. 140%, 98%, 47%. Here's the problem with these numbers. Sure, everybody loves net margins when they're that big. Those are some fat numbers, but they're not part of the core business. So that means they're kind of one-offs. What is reasonable? Well, we go back just to Q1 and you're looking at 3% net margins. So one of the things I'm always looking for is consistency. Revenues are consistently increasing. Net margins, consistently all over the board. No one can tell me what next quarter's net margins is going to be given previous net margins. And that to me is really important. Projected earnings per share, $2.06 for 2024, $2.50 for Rambus in 2025. How does that break down? You're buying effectively the next 4 quarters when you're buying RMBS stock at these prices. So your yield would be based upon the $2.06. Unless you wanted to rationalize, but not really going to get much yield out of 2024 because take a look at revenue growth. Take a look at the earnings. Yes, it's much higher. It's 76 cents higher, which is a considerable number higher than 2023. But then you start looking at 2025, and all of a sudden on a annualized basis over the next 2 years, Rambus stock has a lot of potential. And that's where I kind of looked at when I broke things down, but I'm only going to focus on what's going on for RMBS for 2024. Treasury yield, 4.60%. SOXX yield, 1 share, all 30 stocks. What do you get if you bought 1 share of all 30? 3%. You're looking at the Treasury yield, 4.6%. You're looking at the AI or the semiconductor stocks. It's just too much risk, not enough yield. and I'm already pricing in all of 2004's earnings, and I'm considering 2025, stock price valuations are too high relative to the yield you're going to be getting. Earnings per share for Rambus, the price, of course, 57.75. RMBS yield 3.56%, slightly higher than SOXX, which, if you recall the first chart when I compared RMBS to SOXX, SOXX underperformed Rambus. There's one of your rationale right there. You're just getting more value out of Rambus stock. But what would be a good value? All right, you're looking at the treasury yield of 4.6%. Let's say you would consider 5.25% as a reasonable risk yield to get given risk. Where would that put RMBS stock? 39 bucks. Then you factor in 2025. Pretty decent increase in earnings per share. Now all of a sudden you're rationalizing $44. So at the end of 2024, Rambus should be targeting 2025 earnings and be priced at $44. It's trading 57. That's a bit rich considering the economic environment we're entering with treasury yields as high as they are. For me, I like a little more consistency. I didn't like net margins all over the board. That was kind of important to me. Net margins, you'd want to see a higher overall consistency at a number that would be, say, better than the broader S&P 500. There's less riskier stocks where you could get a higher sort of probability rate. Given that, I would consider Rambus sub 39 bucks. The Federal Reserve is likely to pressure interest rates higher for some time. The stock market is easily going to be coming down, and it might happen real hard, especially September, October, November. Because of that, you might be able to pick up RMBS stock sub 39 real easy. But that doesn't necessarily mean they're going to be able to hit their targets if the economy contracts. At the same time, AI stocks might be somewhat immune to that on some level. Something that you need to kind of continually update on. For those of you who have been following me for some time, shutting down the website down below, my Substack email newsletter. You can sign up for there. Make sure to click there. If you're finding my channel for the very first time here on YouTube, hit the like and follow button. Thanks so much for the comments. Make sure to sign up for the Substack newsletter. We'll see you in the next video.